Can you deduct medical expenses from your health insurance taxes? Have you ever wondered if you can deduct medical expenses from your health insurance taxes? This is a common question, especially when managing costs and coverage. Let's break it down. First, you cannot directly deduct medical expenses from your health insurance taxes. Health insurance premiums and medical expenses are treated differently for tax purposes. However, there are ways you might be able to deduct certain unreimbursed medical expenses, and in some cases, health insurance premiums, depending on your situation. To start, there is a medical expense deduction threshold. You can deduct qualified medical and dental expenses that you paid out of pocket, but only if they exceed 7.5% of your adjusted gross income for the tax year. This means you can only deduct the amount above that threshold when you itemize deductions on your tax return. For example, if your adjusted gross income is $40,000, you can only deduct medical expenses that exceed $3,000, which is 7.5% of $40,000. Next, it's important to note that only unreimbursed expenses qualify for this deduction. If your health insurance covered your medical bills, or you used a flexible spending account or health savings account to pay for them, those expenses are not deductible. So what counts as qualified medical expenses? Deductible medical expenses include payments for diagnosis, treatment, prevention of disease, and various healthcare services. This can include hospital care, dental care, vision care, prescription medications, and, in some cases, health insurance premiums. The Internal Revenue Service provides detailed guidance on this in their publication 502. Now, let's talk about health insurance premiums. If you are self-employed, you may be able to deduct the premiums you pay for medical, dental, and qualifying long-term care insurance for yourself, your spouse, and dependents. This deduction is available even if you do not itemize deductions, but only 4 months when you are not eligible for an employer-subsidized health plan. For most other taxpayers, health insurance premiums are deductible only as part of your total medical expenses that exceed the 7.5% adjusted gross income threshold, and only if you itemize deductions. To benefit from deducting medical expenses, you must itemize deductions on your tax return using Schedule A if your total itemized deductions, which include medical expenses, mortgage interest, state and local taxes, and charitable contributions, do not exceed the standard deduction amount, it may not be beneficial to itemize. In practical terms, while health insurance helps cover many medical costs, some out-of-pocket expenses like copayments, deductibles, and uncovered treatments can add up. Keeping detailed records of these unreimbursed expenses can help you determine if you can reduce your taxable income through itemized medical expense deductions. For self-employed individuals, deducting health insurance premiums can provide additional tax savings related to health coverage costs. In summary, while you cannot deduct medical expenses directly from your health insurance taxes, you can deduct unreimbursed medical expenses that exceed 7.5% of your adjusted gross income if you itemize deductions. Self-employed individuals have a special allowance to deduct health insurance premiums directly. Understanding these rules can help you manage costs and coverage effectively within your health insurance and tax planning strategies.